190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my Signal service and receiving my personal trades, please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. Before I start today's video, I just want to apologise for not posting a video yesterday. I was actually travelling for a long weekend break, and unfortunately I got heavily delayed in my travel, so I actually wasn't home in time to post a video. So thanks for being patient with me. But let's have a look at the S&P 500. S&P 500, of course, yesterday ended down ever so slightly. It was a rather muted trading session, not much volatility at all. And, I've woken up this morning to some more bad news. And, again, I've come onto YouTube as of recent, but definitely the past month, and I've been rooting for another fall back down towards the lows. And many of my viewers here on YouTube have basically come out and said, Max, you're getting it completely wrong. And I don't want to be that bearish person who comes on and sparks fear into the retail investor, because that's not my goal. But I just have to be honest, and my personal bias on the markets right now is that this is just another bear market rally. And this just forces me to bring up one of my favorite charts of the year so far, and it's this. This was a bear market that occurred between 1929 and 1932, and the fundamental reasons that caused this bear market are very similar to what we're seeing now with regards to inflation spiking, etc. And as you can see, on 6 separate occasions we had these bear market rallies where investors thought that the worst was over, but every single time when we had one of these bear market rallies, the market went actually lower to go and create fresh lows. And that's what I'm kind of expecting to happen here, guys, for the S&P 500, for the Nasdaq and the Dow Jones 30. I still do not believe that we have seen the lows here. And also, I think it's very important to point out that the average bear market lasts for 18 months. It hasn't been that long that the S&P 500 actually just entered into that bear market territory. If we look how long it took us to go down to minus 20, so it would have been just here on the 20th of May. If we look at that from a time perspective from when we were at those highs, it only really lasted for about 135 days, which is about 4 months. That's how long it took us to actually get into that bear market. But if we have a look now, to see how long we've actually been trading it in 1/4, it hasn't been long at all. If we just peel this back to the current trading session, sorry, that's a percentage perspective. Sorry about that. Actually, to bring up the day one, 2 seconds. There we go. So let's just take it from the 20th of May up until now. We've only been in this bear market for 74 days, which is 2.5 months, guys. Again, let me just say that again. The average bear market lasts for 18 months. So, again, I do not believe that this rally is going to take us back to those all-time highs, and we can see a break above the 200-day EMA. I come on here last week saying that this area is going to cause a lot of issues, and we're already starting to see that. We hit pretty much that red box on by the dollar, and we've already started to roll over. So I wouldn't be surprised to see us trade back below 4,000. We will be supported by the 50-day EMA, but ultimately I do expect some fundamental news to come out which will send us below that area and trading back down towards the lows at around 3,500. That's my first target here for the S&P 500, and we could go lower. And I just want to come out and say again, this morning I've woken up to some more bad economic news. We have South Korea that has just reported record high inflation. Why is that important? Why does South Korea have a massive impact on the US markets? The reason being is because Asia's done a very good job of kind of hiding away from the current rises in inflation. I think when it comes to supply chain issues and staff shortages, Asia have actually coped it very, very well due to their large population. So, they haven't really seen that much high inflation as of recent compared to, Western countries, but now they are starting to see it, which is a massive worry for the global economy. As well as that, here in the UK, this is probably the most important. Analysts have now expected the average household to pay £3,600 extra in energy bills. That's just energy bills. Previously, that amount was only expected to be £2,200. So we've almost jumped 100%. And that is going to be a significant, that's going to have a significant impact as we go into the winter months. Many families here in the UK, for example, are already coming out saying that they're basically struggling to make ends meet and put food on the table. And it's a summer; they're not even paying for energy bills. So as we go into those colder months, as October hits, I really do believe that the UK consumer is going to be so stretched, and there's just going to be no excess income to go out and buy luxurious goods like a new Apple Watch, a new MacBook, a new Tesla car, etc. And this is the UK. UK is rather sufficient on creating their own energy. Other countries in Europe, like Germany, for example, that solely rely on Russian energy, are going to be the countries that get hit the biggest. And my expectations is that Europe will enter into a recession first, and of course that's going to have a massive impact and weight on the US economy as well. We've just seen it with Microsoft, for example, just from the FX headwinds alone, with the euro now becoming parity with the US dollar. We saw how much of a negative impact that's had on many US corporations. Well, wait until they enter into a recession. So yes, this was a fantastic rally. The Fed come out and said some pretty positive things, and I think that this rally, it definitely was well deserved after Jerome Powell's comments. But I think ultimately, guys, we do fall back down below. And again, I don't want to be Mr. Negative coming onto you trying to spark fears. But if you have made some profits in the recent weeks, right now is a perfect opportunity to take those profits off the table and wait for the market to fall. I'm not even telling you to go and short this market. My personal stock trading account, I'm sat in cash right now. I don't own one single stock, and my goal is to buy them down at around 3,500, and that's when I'm going to become extremely bullish, medium to a longer term, because I do expect us ultimately to go up to those all-time highs, but just not yet.
500,000 barrels per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is